Good morning, traders, and a happy Thursday out there to everyone. Hope that y'all had a good evening there and are all ready for this nice day in front of us. Just before we go into the charts, just a few items to make note of on the economic calendar for today's purposes. We have GDP figures for the U.S. and our unemployment claims, both of which are listed as red impact figures there. So we'll certainly want to see how the market responds to those. And then we have the home sales figure at the top of the first 30 minutes. And since we had the holiday there on Monday, we'll have the natural gas and the crude both due out today. The crude will be due out at 11 o'clock Eastern, so pushed back just 30 minutes after where it typically would come out there. So a few items on the board to take into account there. And with that, we're going to jump into our daily charts here of the S&Ps. Alright, so we had our nice range expansion bar down yesterday. Let me just take away these dots for the initial moment. So we had our range expansion down. We ended up settling in at the very end of the day, kind of closer towards the low. So we had a little runoff into the close. So our previous day's low, so we have it 52, 68 and a quarter for our S&Ps there, and then we traded quite a bit lower in the Globex session there. We got down to 52.50, and we can recall yesterday where we were coming down to the 73 zone and the 64, so we did come down and do some work coming in beneath those two broader points, which we'll look at in a little more detail shortly. But with that said, previous day's low is going to be our, a little bit of overhead now that we, took it out. So between that and that previous cycle low of the 73.50 there from the bottom of Thursday's bar would be kind of coming in confluent with each other there. So nice, follow through from the range expansion component for one. So we already got the test below the previous day's low. And then when we'll come in here, we'll take a look at this intraday chart in just a tad more detail. Most of the zones are still static from what we had there yesterday. Right, we were able to do our holding beneath the 0575, and then at the very end of the day we were coming close, but didn't really breach the 73.50 until basically we closed. Right, we kind of closed into that point, so we took out both of those zones, the 73 and the 64. We came down and just kind of hit with a bit of a thud. Coming down from that 240-minute time frame, we start to look at our intraday data, something like a 30-minute chart. A lot of this is unfolding from overnight session. Asia was down, and then Europe started to regain footing. So we've already worked off, or are working off, the buy divergence on the 30-minute data, coming back into those same zones, and we can see overhead. Right, we do have a little bit of the single print or low developed areas that would provide a little bit of a hurdle there for us. So, counter-reactive lift, we could still play inside the 64 to 73.50, and then just noting that that's in the backdrop of our 240-minute structure, right, coming down in a relatively smooth rhythm. All right, so that's where we are there in our S&Ps. We'll keep tabs on both of those time frames, and then we'll also just take a quick peek over here to the DAX future as well, because the DAX had its 2 days of high to low coming into the session. It as well traded much lower overnight, so kind of similar to our S&Ps, right? We pushed down first. We're having a little counter-reactive lift coming back inside the previous bar's range. So if we take the same DAX chart, look at that 30-minute data, it'll be kind of similar, the nature in which we're trying to come up off of the low, even though we already traded through it. 18,577 should still serve as an important reference point there in the case of the DAX, right? A little bit of overhead there to deal with for it. So if we blow up the oscillator just a notch, you can see it's starting to do the healing process there. So 120-minute EMA pretty much comes in line with that previous cycle low in that of the DAX. So we'll keep an eye on it though. It's already coming back up near the unchanged line there, so it had a little bit of damage done already in the overnight session. So that's there with our DAX and S&P respectively. We have the euro currency next in the queue here. And with our euro currency, we also had a little better of a showing when we had pushed down yesterday. Let me do this here. This chart's a little bit cluttered. Just bring this one. It's a little more clean. It's already scaled accordingly. So with the euro currency, we had our range expansion bar down yesterday. Important to get the little piece of follow through component. So we got the trade below the previous day's low out of the way for the EC. Similar with some of these other groups as well. We can kind of see that's been a theme from the overnight there. So here with the euro currency, since we had a heavy selling bar there yesterday, just noting that even with a good counter reactive lift, what we're entering into is big overhead of like single prints or lower developed zones. So viewing this kind of general area as being a little overhead resistance between the 83 mark and 84 on that of the euro currency. Really shows it best there on the hourly displays, right? We kind of went sharp up through this area. And then we came down sharp down through that area. So between the 1.083 and 1.084 hasn't really been traded through a whole lot in that of the euro currency. So that should likely still serve as a little bit of overhead, kind of initial resistance zones there for that of the EC. So we'll keep that in mind there. I think either those hourlies or 120 minutes should serve as nice time frames to follow along with. Taking out that 8150, we can recall from yesterday, right? We were just kind of slowly inching our way down towards that point at the end of the day, and then finally we got a nice gust of wind and kind of blew them over there. So they took out the 8150, and now we're just doing some work back on the other side of it. So any type of retesting or pushback down, 8150 should still serve us as a nice reference point in the case of the euro currency. And then we have our gold here. Just squeezing out that full test back down on that daily chart. Right, we had our 3 days of low to high, our expansion day yesterday, right? Still in the backdrop though of kind of coming into balance, right? Because we did some good testing around that 2-day low. I believe we took it out there just by one tick, so that's kind of the formation there. But overnight, we at least were able as well, starting to detect the theme, kind of like the EC or the S&Ps there, where we had the follow-through component. We've come back up and are retesting the bottom of yesterday's range. But it's the important thing here with this gold is that we were able to make the full test down. Of course, we can see it wasn't very, long that we spent down there. It's kind of a short-lived test, but the way that shows up here on the hourly charts is also rather curious, drawing our attention back to the oscillator condition here, working off as well. A little bit of this has already kind of played out, but this bit of bidivergence or loss of momentum on the hourly charts on the test of that low. So we came up all right, and we got pretty wide region to roam here. 2381 is the upside area, a little bit of a tiny volume node that we had put in there. So gold up off of its lows, but it's going to have some work still dialed in for it there, considering the nature of yesterday's range. All right, and previous day's low, since that'll be a little over and under 2356.6 in that gold there. And then our infamous the crude in here. All right, we know kind of what we dissected a little bit there in the crude there yesterday. The look above previous high of this trading range. Closed one bar up above it yesterday, very quick to come back inside the range, right? We had the loss of momentum on the hourly chart, so we've come back to the core, right? We've moved down also to note, right, because we were mentioning this just a notch on the close, monitoring how we would respond to a test of the daily 5 SMA, which we are around here, 78.96 is where that comes into sight. Oftentimes the first touch, in a nice trending market, first touch of the 5 SMA, oftentimes generates a little bit of interest, so we're kind of testing in towards that point. Thing is, over here on the hourlies, the 120-minute chart, looking in here at this oscillator, hasn't fully ripened in terms of being like a nice two-part wave or a divergence. We just have the initial cycle low on the 120-minute. You start to get a tad more detail on the hourly charts, right? Once again, some of this activity trying to resolve overnight. So this was the hourly sell div yesterday, right? We had our push down, lower Keltner channel, a little counter-reactive lift, and our second push. So that's why we're working on a little bit of that oscillator condition there. Any further down with the crude, like monitoring the 78.50 there as being a little bit of a supportive area for that of the for that of the crude. Right, but kind of curious if we come in here and look at some of these different charts, right? So EC on the hourly charts, a bit with the gold on the hourly charts. We could see the crude similar on the hourly. So it's a bit of a theme there from what we've been having overnight. All right, and then lastly here we have the bonds. Bonds also kind of fitting into that category. But the nice thing with these bonds is that we took a little deeper look at them into the close there yesterday. If we bring our little dots back over here, we know that yesterday was our second PF3 down on the daily charts. So recall, right, we were monitoring the hourlies and the 120-minute chart, seeing as to how we want to handle the buy divergence or loss of momentum. Right, so if I do this here, right in here, this is where we settled or closed yesterday, right? So impulse down, a little shortening in the length of the swings. So once again, these type of items don't necessarily lend themselves to large moves by any means, but we've had a respectable counter-reactive lift, so we're trading as an inside range bar, but we've already had our movement up. So with these bonds here, first of all, this is a overhead area, 115.09. So point being, even though we've already had some counter-reactive lift in the bonds, we haven't really tested back for a higher low. So want to be a little bit cautious with these bonds, right? 2 PF3s down, already had counter-reactive lift. So in case we do any additional retesting there, want to be on guard for that there in the case of these bonds, right? We do have pending data this morning, so I'm sure that'll have no problem shaking things up a bit there for those bonds. All right, and with that, we can get these things back in order here. We got our data point coming out in just a little over 2 minutes there, so it gives us a little time to get things back and adjusted. And then we'll be on our merry way here for this nice Thursday in front of us there. All right, and we'll adjust this chart here. We'll put something else up there in place of the daily chart, but we'll leave those 2 40-minute S&Ps over there for now. All right. And that's about all for now. And that data, once again, is GDP and unemployment claims.